Before we start this video, do like and subscribe to our channel and not miss on any updates.
Let's now have a look at a question which I will personally never forget in my entire life. It was the first time this type of question was asked in our CA final examinations of November 2009. Prior to that, such a combined question was never asked. And the beauty of this question is there is no great adjustment at all. Means there is no need to do any adjustment. Numbers are also very simple. Just that they had tested for the first time, to the extent I remember in my preparation, that they have tested for the first time a subsidiary, a joint venture, an associate, all put together, and it was for 16 marks. And you know what I did? Because it was for the first time, I didn't know what to do. I just kept this question aside. And during that time, all questions used to be compulsory. So there is nothing called even option for me. And at the end, when I had about 40 minutes left, that is when I took this question, and luckily I got this question right, and which actually helped me to secure the marks that I secured and also get All India rank 2. Now this question, as I told you, this combines the concept of subsidiary AS 21, joint venture AS 27 and associate AS 23. There is no complexity in this question, just that if at all this kind of question comes in the examination, keep your head cool and solve the question. If you have conceptual clarity, and that is what helped me, my conceptual clarity of understanding those three standards actually helped me to solve this question. There were many of my friends who could not attempt this question because they had not practiced this type of question, right? So let's have a look at this question. P Limited owns 80% of S. So parent owns 80% of subsidiary, 40% of J joint venture and 40% of A. J is a jointly controlled entity and A is an associate. Balance sheet of 4 companies as on 31st of March of year 9 are given below. So I have not even changed the dates because that was there, it was in 2009, right? Now if you look at the balance sheet, this is the summarized information. Investment in subsidiary, joint venture, associate 800, 600, 600 in the standalone financial statement. Fixed asset 1000, 800, 1400, 1000. So this actually I should change it to PPE because now we call it property, plant and equipment. Then current assets total. So total is given. See, very simple numbers, no complexities. Share capital, equity share capital, retained earnings and creditors, that's it, right? P Limited acquired shares in S many years ago when S retained earnings were 520 lakhs. P Limited acquires its share in J at the beginning of the year when J's retained earnings were 400 lakhs. So S was acquired many years ago. At that point of time, the retained earnings was for 520. P Limited acquired at the beginning of the year. P Limited acquired shares in J at the beginning of the year when the retained earnings were 400 lakhs. P Limited acquired its share in A on 1st April of year 8 when the retained earnings were 400 lakhs. So means both of them are at the same time. The balance of goodwill relating to S had been written off 3 years ago. So whatever is the goodwill balance related to S, it was written off. Now this adjustment also was tricky because we didn't have enough questions which told us what to do when goodwill is written off. Okay, so that also we will handle it. And the value of goodwill in J remains unchanged. Prepare consolidated balance sheet of P Limited as on 31st March of year 9 as per AS 21, 23 and 27. Now what we need to do here is basically prepare the consolidated balance sheet of P Limited along with S, J and A. For S Limited we will follow 100% consolidation. For J we will follow proportionate consolidation, and for A we will follow equity method, right? So independently we have done all of this. Now let us see how does it appear in a combined question. Now let's get into solving this question. So we'll have to follow step-by-step approach. First we have to do the calculations for the subsidiary. What is the goodwill? What is the post-acquisition reserve? Then we'll have to do for the joint venture, what is the goodwill? And for associate we have to see what is the value of investment in associate. Please remember, as far as this associate is concerned, we are not bothered about individual assets and liabilities. What we are bothered about is what is our investment? 600. To this we will add share in post-acquisition profits, right? That is what we will add. Same way for joint venture, we will take our share 40% and will consolidate that in the financial statements. So now let's prepare the working notes. Subsidiary S, analysis of profits, reserves balance, reserves as on 31st of March of year 9, right. Now 31st March of year 9, if you see the profits or reserve balance, what is given? Retained earnings is 3,400. So this is 3,400. Out of this, how much is pre-acquisition? It acquired S many years ago when S retained earnings were 520. So pre-acquisition is 520. So post-acquisition, so I'll put it pre-acquisition and post-acquisition. Post-acquisition is 3,400 minus 520, which is 2,880. Now please remember, this pre-acquisition profit, whatever we have calculated, that will be used to calculate what we say cost of control. Whereas 2880, whatever is our share, we will add it to our reserves, and whatever is minority interest will be added to minority interest, right. So share of P, how much is the share of P? As per the question, P acquired how much? 80%, right. So share of P 80%, 2880 into 80%, and minority interest, which is 20%, which is 2880 into 20%, that gives us 576. That is the analysis of profit. As I told you, no adjustment, no dividend declaration, no mid of the year acquisition, nothing is there, right. Now second, calculation of goodwill. Goodwill. Sir, why are we saying goodwill? Because the question says goodwill has been written off. So it is of course a goodwill, right. Now for calculation of goodwill, we need cost of investment. Cost of investment as per the question is 800. Cost of investment is 800. Net assets on date of acquisition, share capital and reserves and surplus, right. So how much is share capital? Share capital is 400, and they have not given information about further changes, so it is 400, and retained earnings on date of acquisition is 520, we have already calculated. So total 400 plus 520, which is 920. Share of P 80%, which is 920 into 80%, which is 736. Now we paid 800, but our share in net asset is only 736. Because we have paid extra, what do we get? We get goodwill. So goodwill is 800 minus 736, we get 64. The amount of goodwill to be recognized in the consolidated balance sheet is 64. But the question also says subsequently that the balance of goodwill pertaining to S has been written off. Now when you write off goodwill, you will write it off only from the consolidated balance sheet and not from the standalone financial statements. So here written off entire amount 64. So closing balance will be 0. So you have credited goodwill, you will debit that in the consolidated P&L. So we have calculated goodwill in subsidiary. Now comes the joint venture. Goodwill in entity J, right. Here also cost of investment. How much is the cost of investment? Cost of investment is 600. Net assets of J. Now for net assets of J, we have to see what is the share capital and retained earnings on the date of acquisition. Share capital is 800 and retained earnings was 400. Retained earnings was 400. So share capital 800, retained earnings is 400, right. So share capital 800, retained earnings 400, total is 800 plus 400, 1200. Share of P, P has how much share? 40%. So our share is 1200 into 40%, which is 480. Sir, what about minority interest? We do not have any concept of minority interest when it comes to joint venture. We will only do proportionate consolidation. So we paid 600, our share is only 480. So goodwill is 600 minus 480, that is 120, right. So that is goodwill in entity J. and we can do for A also together because there is, so goodwill in entity J, A also we can do it together. Cost of investment in A is 600, share capital is 800, retained earnings is again 400, so it is same number, total 1200, our share 40% 1200 into 40% 480 and the goodwill is 120. This will, now please remember, this goodwill of associate will not be recognized separately, it will be included in cost of investment, or it will be included in carrying amount of investment only, right. We have to calculate, but it will not be included. Now the first part is completed where we have calculated how much is the goodwill for each of the acquisition. Now the next thing what we have to do is we have to calculate what will be the consolidated P&L balance in the books of P Limited and the minority interest. After that we can prepare the schedules of the balance sheet, right. Now coming to consolidated P&L, so this is 3, so this is we have done for joint venture and associate, or you can actually exclude this also, we can directly do it. Analysis of profit, calculation of goodwill in subsidiary S and calculation of goodwill in J and A. Now next is consolidated P&L or consolidated reserves, because we do not have split of P&L and reserves, we can directly calculate consolidated reserves. So consolidated reserves will have what all? It will have retained earnings of P, share in post acquisition of S, share in post acquisition profits of J and share in post acquisition profits of A. So all of this we have to add. Now retained earnings of P, how much is the amount? Retained earnings of P they have given to be 4,000. So entire 4,000 you will consider. Share in post acquisition of S we have calculated in working note number 1. So from there you can directly take from working note number 1, our share is 2304. Then share in post acquisition profit of J, have we calculated? We have not yet calculated, we have to calculate that. How much is that? That is total retained earnings is 3600, on date of acquisition is 400. So we can actually put it here, working note number 5. Share in post acquisition profits in J and A. Retained earnings as on 31st of March of year 9. Retained earnings as on date of acquisition. So as on 31st March of year 9 for J and for A. For J it is how much? For J 3600, for A also 3600. See, calculation wise this question was very easy. Only the way it tested our concept, no, that made it challenging. Date of acquisition it was 400 and here also it was 400. So post acquisition is 3200, 3200. Post acquisition profits. Share of P 40%. So 3200 into 40% and 3200 into 40%. 1280, 1280. So this increase. So whatever is our share in post acquisition profit, that we will add in the consolidated reserves, right. So 1280 our share, working note number 5 and working note number 5 1280, right. Now there is one more adjustment which is done. That adjustment is we have written off goodwill, so that also has to be reduced from the consolidated reserves. So written off goodwill in S, working note number 1, 64, entire amount has been written off. So the balance if you see comes to 8800. 8800 is the consolidated retained earnings figure, right. After consolidated reserves we need minority interest. Now, as far as minority interest is concerned, share capital, share is 20% and retained earnings, 20%, right. Now, how much is share capital? Share capital in the balance sheet is 400, so 400 into 20%. And retained earnings is 3400 into 20%. So, 400 into 20% and 3400 into 20%, we get 80 plus 680, 80 plus 680, 760. Sir, can we take this 576 and do the calculation? Of course, we can do. For that, what you have to do is, here share of P we have calculated 80%, right? So, here also you have to calculate one more thing, minority interest 20%. So, that is 920 into 20%, which comes to 184, right. So, there the other way of calculating that will be share in net assets on date of acquisition, whatever we have calculated here, 184, and add post acquisition profits, their share, whatever is the share. So, if you go back and see, the share is 576, and if you total this up, 184 plus 576, you get 760, right. So, that is how it can be done. Either ways it is fine. Then we are done with minority interest. Now, if you come back to the question, for subsidiary consolidation, we need goodwill, we have calculated. We need consolidated reserves, we have calculated. We need minority interest, we have calculated. For joint venture, we need goodwill, we have calculated. We need share of profit, we have calculated. For associate, we need the investment balance. So, for associate, carrying amount of investment in A, cost of investment 600, add share in post acquisition profits. How much is the share in post acquisition profit? 1280. So, the carrying amount of investment is 1880, includes goodwill of rupees, all the amounts are in lakhs. So, includes goodwill of 120. So, here you can mention in the bracket, includes goodwill of 120 lakhs, right. So, these are the working notes needed. With this, we can prepare the consolidated balance sheet. Consolidated balance sheet of P group as on 31st of March of year 9. Now, let us prepare the consolidated balance sheet of P group, that is P including its subsidiary, joint venture and associates as on 31st March of year 9. Now, what you have to do is, for subsidiary, take all the assets, all the liabilities, add line by line. For joint venture, take 40% and add line by line. For associate, only show the investment. That is all you need to do, right. So, coming to the balance sheet, on the equity and liability side, first thing is you have shareholder funds. In fact, when I had solved this question, it was a T-shaped balance sheet. So, earlier it used to be a T-shaped balance sheet, and that is what we had to present it in the examination, right. So, do not say, sir, in 2009 why are you using the latest format. Shareholders fund, under that we have share capital, note number 1. You can actually prepare the notes to accounts also as a practice, right. So, share capital, if you see, you will take only the share capital of the parent, that is 1000. Okay, that is the share capital. Then reserves and surplus, note number 2. Reserves and surplus, that is the retained earnings, what we have already calculated, 8800. Because you have already calculated above and the amounts are not really different, you can actually give the reference numbers of working notes also. Okay, reserves and surplus. Then in the liability side, what do we have? We have current liabilities, but we will have a minority interest. So, reserves and surplus comes from working note number 4. Okay. Minority interest comes from working note number 5 or 6, I think, working note number 6, that is 760, right. Then you have current liabilities, There is actually no non-current liabilities, only current liabilities. Now, when it comes to current liabilities, we'll have to prepare a note for this also. So, we'll put it at note number 3. So, let us come down, notes to accounts. Notes to consolidated balance sheet, share capital 1000 lakh shares of rupee 1 each, 1000, that is given, right. We can say authorized, issued, paid up, authorized, issued and paid up, right. Then reserves and surplus, retained earnings as we have calculated in above working note number 4, 8,800, right. Because you have already calculated, you do not need to give a breakup of working here, or in the examination you can prepare the working note here itself, either ways you will get the marks, right. Then we have current liabilities. In current liabilities, the way we can present it is P Limited, S Limited, J Limited, here we will take 40% and total, right. So, what is the current liability in P Limited? P Limited 200, 300, 250. So, there it is 200, 300 and for J Limited it is 250 into 40%, that is 100. So, the total comes to 600. The total comes to 600, right, that is for current liabilities. Then, so what I will do, you can do here, put it up here as 600. Then when it comes to assets, first non-current assets. Under non-current asset you have property, plant and equipment. Note number 4, property, plant and equipment. Again here P Limited, how much is P Limited? P Limited 1800, 1400, 1800. Then we have 1400. So, you will take 1400 into 80%. For associate you will not take, and the total comes to 2920. So, here you will take 2920. Then you have goodwill. Goodwill, working note 5, goodwill of S 0, goodwill of J. How much is the goodwill we have calculated? We have calculated 120. Please remember, associates goodwill will not be shown as goodwill. So, it will be only 120. So, the total is 0 plus 120, which is 120. Then we have current assets. But before current assets, we also have in non-current assets, we need investments in associate, working note number 7, yes, working note number 7. So, investment in associate we have calculated as 1880, that has to be disclosed here. Then we have current assets. For current assets again, how much is P, how much is S, how much is J and how much is total. So, current assets of P Limited, okay. So, I missed this, current liabilities they have given creditors. So, I should write it here as current liabilities as creditors, okay. Then current assets they have not mentioned anything. So, it is current assets only. P Limited 2200, S Limited 100% 3300, J Limited 40%. So, 3250 into 40%, 3250 into 40%, the total becomes 6800. So, current assets is 6800. So, this is the current assets. Now, if you total it up, $11,160 on the asset side, and it comes to 11,720. Something looks like I have messed up. Property, plant and equipment, it has to be 40%, not 80%. So 2360. Okay. So here it will be 2360, which is 11160. Right. Very simple question. Highly scoring, provided you keep your head cool and solve it properly. Right. So can have these kind of bounces coming up in the examination. Not all the questions. One of questions may be tricky, where you have to actually keep your calm and solve it properly in the examination.